Hello, hi everyone. I'm Hitesh Singla, and I welcome you all to the another market update from 14 to 18th of April 2025. So let's begin this update with the starting with the world economy. United Kingdom came out with their inflation number, which is down by 2.6%. This is their lowest number since the month of December. This was backed by the as the prices in oil prices have fell in the last month. China came out with a GDP number which grew by 5.4% in the first quarter from a year ago, which was a very good number. A doubt was that this number has been cause of the tariff effect, where the a lot of orders have been preponed to counter the tariffs. ECB, that is the central bank for Eurozone, has lowered its benchmark deposit rate by quarter point. This is their sixth time rate cut, which leaves the benchmark rate now at 2.25 percentage point. This 2.2 point, this lowering down of the benchmark deposit rate is a main contention reason, which is not being liked by the United States, as Mr. Trump is uh, is battling with Mr. Powell to bring down the interest rates down. India came out with a CPI with the inflation number. The CPI inflation for the month of March moderated to 3.3%. This is the lowest number since August 2019. The headline inflation also averaged at 4.6 percentage point. Um, the significant contributor to the this lower inflation was easing in the food and beverage prices, which dropped to 2.9 percentage point from 3.8 percentage point in the month of February. We saw a deflation in vegetable prices by 7%, pulses by 2.7%, and eggs by 3 percentage point. But still, there's a problem from the double-digit inflation from the edible oils, which is at 17.1%, fruits, which is at 16.3%. The fuel and the light category, which has been in a deflation zone for about consecutive 18 months, is now out of deflation in this num- in this routine. So let's move to the regular economic update. U.S. 10-year Treasury bond yield, which had spiked in the last week, has eased down a bit to 4.33%. 4.33. We can see the graph, which is falling, which shows a falling curve. Uh, on the US dollar index, on a weekly point, we saw it remained kind of a range bound and closed at 99.404, down by 0.38%. Oil, in a surprise move, the Brent crude oil went up. This was towards the end of the week, and it closed at $67.85 a barrel, up by 5 percentage point from the last week close. This was because there was sanction imposed by United States on the on the Iran, on the Iran, and there were some supply cuts that are happening in the world over. So the crude oil prices went up. Now we look at the gold prices. Gold prices for this week in India was trading somewhere about 95,239 per 10 grams, which was up by 1.44 percentage point from the last week closing. Now let us look at how the world market performed in the last week. We could see the US market was in red zone. In the last week, the Nasdaq was down by a point 0.5 percentage point, with Dow Jones was also down by 2.66 percentage point. The European market we could see was in the green zone. It was up by 3 to 4 percentage point. The Asian market was also was in the green zone, where the Gift Nifty was up by 3.37%, Nikkei was up by 3.41%, Hang Seng was up by 3.4%, and Shanghai market was up by 1.19%. So mostly the markets except the US market was in the green zone. So there could be a possibility that the money could have been either been moving to the emerging markets and the European markets, and also the US Treasury bond yields, which has come down a bit from the previous high. Definitely, the money has also moved into gold. Look at now. Let's look at how the FI activity looked in this week. FI and DI activity looked in this week for the Indian markets. FIIs, after being net seller for about starting of this month, we had a FII flow of 12,151 crore worth of equity. DII sold 2,711.25 crore worth of equity. So for overall for the month of April 2025, FIIs are net sellers at 22,490 crore worth of equity, whereas DIIs are net buyers at 24,876 crore worth of equity. Now let's see how the what was the impact on the Indian market of FIIs inflow. Of course, the markets were up. The Sensex and Nifty were up by 4.5. The major movement was seen in the Nifty Bank, which was up by 6.45 percentage point and led by the FIIs buying. Nifty mid cap was up by 4.2 to 4.4%. Nifty small cap was up by 4.55%. If we look at the valuation, Nifty 50 trailing Ps has now reached at 21.7, which is below the 2 years and the 5 years average. Nifty Midcap 150 trailing Ps at 34.3, just above 2 years and below 5 years average. Nifty Small Cap 100 trailing Ps at 29.1, just above 2 years and close to 5 years average. The Buffett indicator shows that the equity market is modestly overvalued. So moving to the last section of the presentation, the Indian bond. The 10-year government bond are now currently trading at 6.37% yield, which has come down from 6.5% a few weeks back after the rate cuts intended by the RBI. If you look at the yield curves now, the yield curves in the long term is convex, whereas the medium term and the short term are flattish. I hope you enjoyed this presentation. Do share, subscribe to our channel to get weekly updates from us. Thank you very much.